Hey guys, what is up? It's Dusty here, and welcome back to another episode of the Daily Crypto News. And today, we get ourselves some very interesting pieces. For example, the fact that Elon Musk now overtook Twitter, fired the CEO, CFO, legal team, everything. It's pretty crazy. It's happening right now. We then have a little bit of juicy news on Gary Gensler and the Ripple versus SEC lawsuit. A couple of cool pieces on that. Fun fact, Binance actually invested in Twitter as well, about $500 million. We'll cover that slightly a little bit later in the video. And of course, Visa. They're expanding like massively, and they got a little bit of cool stuff done in the crypto space. All the while Google is, they got into crypto with their payment systems and all, but they're not doing a really good job, and we'll talk today about exactly why. Now guys, it would be greatly appreciated if you watch these videos daily, my daily crypto news, if you could press that like button. And just so we're all on the same page, the crypto market today is not doing too well. Bitcoin sitting at $20.3 thousand, XRP sitting at 46 cents, and Ethereum at around 1,500. It's not the prices that are the bad part, it's the percentages, because people expected, okay, we've had a bullish breakout, things are gonna go crazy from here on forward, but it turns out that that is not the case. There's honestly still quite a lot of fear in the crypto space, and as we said before, don't get overzealous, don't get overconfident. Things could get worse from here before they ultimately get better. Because I ultimately believe things will get better for crypto. We just don't know exactly if that turnaround point is right now or soon. Getting into our first piece of today, Gary Gensler draws attention for his bad performance review. From the Wall Street Journal opinion, even SEC officials and Democratic senators are raising alarms about SEC Chairman Gary Gensler's furious rulemaking pace. Hopefully by now you guys all know that Gary Gensler is the head of the SEC, and most players in the crypto space have basically said, hey, what you're doing against Ripple, XRP, and all that, it ain't the right way to go about it. And this is a quote, some believe that the more aggressive agenda, particularly as it relates to high-profile rules that significantly impact external stakeholders, potentially, 1. Limits the time available for staff research and analysis, and 2. Increases litigation risk. Now, obviously, straight after this came out, all the guys like John Deaton and even BitBoy were on the case and, basically giving their opinion on the fact that Gary Gensler's not been doing too well. It doesn't take that long for all of us to figure out that he's not been doing a good job. And even BitBoy is kind of going crazy on it because, well, they're trying to protect you from your crypto investments all the while. Things like Meta, which you can just easily invest into, Facebook basically, drops like 25% in the day or so or something like that. They're not protecting you from that. They're just protecting you, I guess, from making the crazy gains of the crypto space. I can't really see it any other way. Now, we could sit here and debate this for a couple of hours. I don't think that's necessary. He's being looked at, which has been said a couple of times before, but right now, I think it's kind of clear he's really being looked at, and I think that's a good thing. Because, again, the US SEC is not a bad entity. There's bad players, and they're making bad decisions. If that revised and done better. In the same sense that Twitter is not completely garbage, is just not having the right players as of previously. Maybe now that Elon Musk is the head of the space, he might do better. What I'm talking about is this right here, guys. Breaking news. Elon Musk closes the Twitter deal, fires the CEO, CFO, and I believe a couple of people from the legal team, maybe the entire department, I do not know. And whether or not they resigned or he fired them, it doesn't really matter. These guys are gone. He actually did something very interesting as well, which is to make sure that people that were permanently banned, potentially like a couple of notable people that we know, that it doesn't matter anymore, basically. If they got permanently banned, I think they'll get another review, or, and this is something I'm not 1,000% sure about, he got rid of these permanent bans completely, meaning that there's no way to get permanently banned. It's just a suspension for a longer amount of time, maybe. But I believe it's going to be let's look at everybody that's been banned before for saying something which shouldn't have been said, and then reevaluate, because we do not want to censor people as much as was done before, basically. And that's what I kind of kept saying. A lot of these companies are not bad in essence. They just have bad people leading it and paving the way. Twitter is a really good concept. It works really well. There's just a lot of toxicity and censorship that's kind of misplaced and a bad problem. With, I guess, the SEC, the entity is good. It protects you as investors, from the US SEC. It's just the way they scrutinize crypto is way too harsh and not good. Get different people in or get these people evaluated, and things might turn out really differently where they're actually making the right choices and protecting people in the right way. Now, little fun fact, Binance actually also wired $500 million to back Musk's Twitter takeover. Can't say much about it except for that's pretty nice. Now, on the opposite end, payment giant Visa files trademarks for crypto wallets and the metaverse. They're taking their steps. Mike Conduces said Visa has filed 2 trademark applications claiming plans for managing digital, virtual, and crypto transactions, digital currency and crypto wallets, NFTs and virtual goods, and providing virtual environments like metaverses. It's interesting because they're taking steps toward the right direction. This officially was done last week, but the reports came out just now. I guess it's just a furtherment of whatever they were trying to do before already, because it's not as if Visa is actually new to the cryptocurrency space, they're just expanding upon it. All the while, Google took their first steps, right, with Google Cloud payments through crypto. Apparently, they're still promoting some wrong website, or multiple of them. Basically, if you type in CoinMarketCap, there's still a chance you're going to see a fake website. Just make sure you always check the URL properly, and make sure you press the like button on this video. It is greatly appreciated. But yeah, just be careful with that. Be careful you press the right CoinMarketCap links. Then something completely else, Ton blockchain Telegram to expand Web3 domain service. We actually covered this a while ago already. Telegram is set to launch a second domain name auction for its users. It will first auction 4 and 5-letter social media handles, and names will not need to be renewed annually. It's going to be interesting to see how trendy this will be, as Telegram obviously is one of the biggest guys in the crypto space. Apparently, wallet.ton actually a little while ago when the first auction was there, July 30th, sold for $260,000, and Casino sold for $244,000. As of this point, the auction with the highest amount of ton bid for it is a 63,000 ton coin, and it's trading at around $1.60. But that is something very interesting to, of course, just watch out for. You guys understand. Now, we're going more into fundamentals with this one, and that is actually, don't get fooled buying something. Don't get fooled by the media that you have to get crypto now. Or I'd rather just say it like this. Don't believe advertisements too much because, well, look at this. 1 year later, Bitcoin investors lost over 60% since Matt Damon's crypto ad first aired. People are actually in the finance communities and the scam debunk communities going pretty wild about ads like these, saying, hey, look at this ad. If you listen to it, you would have been down 60%. Where a lot of us are saying, yeah, it's logical because there's ebbs and flows, basically. It's the market cycle. Things sometimes do bad, sometimes do well. If you zoom out, for example, well, there would have most likely been some sort of crypto ad, let's say in the midst of 2020. And if you bought then, you could have still been up, let's say 300% or 200% on your investment. At the peak, could have been up, 17, pick a number, right? 10,000% on your investment. And it is just a little bit of a perspective of timing. But as I always like to say, right now, we're 60% down from where the majority of retail got hyped into it. And the major hypes will happen when crypto is at higher prices. And well, we can see the major app was at $60,000 per Bitcoin. Right now, it's sitting at roughly $20,000. Do the math for yourself. If the majority of people aped in at $60,000, what is stopping the majority of others, the people that are thinking about this stuff, from getting in at lower prices, like, for example, $20,000. I personally think it's a no-brainer, but there are many people out there who are scared when Bitcoin goes lower and lower and lower, when in reality, I think nearly every intelligent investor knows that if you feel the longevity for a specific asset, in this case crypto, the lower the prices go, the less risky it gets, because there's less of a chance of losing a significant percentage on your investment. If you invested at the top, you'd be down, let's say, about 70% right now. I think roughly 72%. If you buy right now, let's just hypothesize that the worst that can happen is for Bitcoin to go to $10,000. The worst case, you're losing half. Where before you would have then lost, let's say, 85% or so. So percentage-wise, it's become less risky. Whereas the upside, if Bitcoin just goes back to that all-time high, you've tripled and a half. Basically, you've 3.5x your money. So from a risk-reward perspective, it is way better. And now, before I end this off, there's actually something which I bookmarked over on my Twitter. And I personally think it's actually crazy funny. If you had followed Jim Cramer, right? Basically, if you followed the masses investing into whatever, stocks, crypto, it doesn't matter. You followed the CBC market alert. Wow. Here, look at this, 16 hours ago. Jim Cramer begins to cry and apologizes on being wrong on Meta. As you know, it went crazy. Weak Q4 forecast and earnings miss, making the price drop 25%. Truly a wild video, look above. But check the Cramer index. And if you check this out, you can actually notice if you followed Cramer right now, you'd be 30% down. If you actually did the exact opposite of what Cramer said, and basically shorted every time, you'd be up 23% if I understand the charts correctly. And just today, you can see that significant difference that came in, right? As of the last, I guess, couple of weeks here, as he made a couple of really goofy mistakes. And you can also see the Cramer ETF where over all this time, you just have lost money basically. They're also tracking a couple of other things like, for example, Pelosi, but obviously that is not as interesting anymore now as, she got caught, so to speak, but let's not talk about that one. Let's stick to the Cramer one. And it's in my opinion, pretty peculiar how his returns are this significantly negative. And the inverse obviously are doing pretty good. Now, I'm not so sure if it's actually being updated properly with all his most recent trades, or if it's just tracking some of the older trades and just kind of keeping track of where they would have been. Because taking a look at the positions here, the Cramer index, the ETF positions, it's not necessarily taking in new information as far as I can see, but we all know the principle still lies though. If you follow the masses, there's a pretty high likelihood you're going to get burned, because if they give everybody the stock winning tips, the life-saving advice to make you tons of money, then everybody would be rich. But more importantly, and this is very interesting, the statistics then would lie, because that would showcase that the majority of people investing in crypto, or actually, the majority of people investing in crypto will win. Let's just say it like this. The majority of people investing in stocks or listening to trading videos or whatever on the major media would win. And you all know that they can't say that because it's not true. We all know the majority of people that follow that TV show will lose money. So do your own research. And I personally think that by getting involved in crypto, you're still a very, very small percentage. And from that perspective as well, if Cramer says buy it, might look into selling it. I know it's kind of pity, but honestly, it's the way that it works the best. Do against what the majority of people are doing. If the majority of people are selling right now, which they are, then buy. If the majority of people are buying right now, you got to look at what's up. You got to look underneath there. Why are they buying? Is there a really good reason to be excited? Or is it just people buying on top of the FOMO from other people? FOMO being fear of missing out for everybody that doesn't know. But yeah, that's something interesting to kind of think about maybe. That was it though for today's crypto news, I think. Hopefully you guys all enjoyed it. If you did, make sure you press that thumbs up because I think it was a pretty cool episode. And if you're looking for a crypto exchange to trade on, check out the links down below. And I'll see you guys again in another crypto video later today. But yeah, every exchange down below can be used in a lot of different countries, I think. Check out BitGet, check out Bybit, for example. Links are down below for crazy bonuses. Yeah, bye-bye.